Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's a daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A bullish thrusting pattern on Friday, but it was only just living up to the name as it came after the previous session's very large combined key reversal down and bearish engulfing pattern. The market did manage to move up through the old neckline, currently at 70.46 of the late December 21 to start of March 22 head and shoulders top, as well as the lesser Fibonacci lines at 70.75 and 70.90, closing just over the latter. Further up, we have the recent 50% Fibonacci line at 71.84 and a 50% Fibonacci line of the July 21 to June 22 move at 7200. Overall, we're still in the break lower from the big March to date ascending triangle. The lower trend line for this pattern is currently 73.59. A primary target X for this pattern would be in the 66.58 area, with a secondary harder to get target X1 in the 63.80 area. There's also a double top formation, even eve time, formed from March to date. This has a primary target X2 in the 69.18 area and a harder to get secondary target X3 in the 66.35 area. Finally, there's the opportunity to look at the action over the last 2 weeks as a possible bear flag stroke bearish halfway hesitation move. If that is the case, then we have a possible target X4 in the 68.50 area. On top of all this, with about 2/3 of the month gone, we are currently set up to make a possible monthly key reversal down for June. If we close on the 30th of June, either above 75.86 or below 75.13, then we'd be on. Right now, we're looking very much at a possible monthly key reversal down, in which case would also be an immediate countering monthly key reversal down. And so far today, well, a gapping lower open since filled in below the neckline and subsequent move, further move, almost down to the next neckline, which is currently at 68.82 of the November 2020 to January 21 hunched head and shoulder pattern. In the process of going lower, target X2, the primary target for the March to date double top even eve pattern, that's in the 69.18 area, has been reached. We've since pulled up to test the overhead old neckline, that's currently at 70.46 of that late December 21 to start of March 22 head and shoulders top. German DAX futures. An interesting day on Friday. It was a counter-to-the-counter bullish thrusting pattern, if a poor example of one, but it was also a possible day 2 and a 2-day bullish tweezer bottom pattern. This coming, as it did, after the previous session's immediate countering key reversal down and bearish engulfing pattern. It seems the market has given up for now, filling the gap left over from the previous weekend between 13.658 and 13.738. The market rose up through the lesser Fibonacci line at 13.115, but failed to move past the lesser Fibonacci line at 13.216. Further overhead, we have the 2021 low at 13.300 and the February 21 low at 13.356. Not far below, we now have the first of the targets on the downside. Now, to explain these, I would like you to consider this. Look at the March to day action as a sideways triangle with a shallower upper trend line, currently at 14.663, compared to a lower trend line, currently 13.825. I know this is skewed rather than completely sideways triangle, but it does merit, and so I'll use it. This current pattern has a possible primary target X in the 12.285 area, and a secondary harder to get target X1 in the 11.210 area. The latter target is actually off the bottom of my daily chart. There's also another possible pattern. It is to regard the last 2 weeks' action much as we have seen in UK FTSE futures. It's a possible bear flag type pattern. If that is the case, and it is still a big if that is the case, then the downside X target X2 would be in the 12.240 area. Finally, on top of all this, with just under half of June to go, we're already set up for a monthly key reversal here. We close either above 14.378 or below 14.090, then we'll be on. Right now, we're looking very much like a monthly key reversal down. Now, so far today, a lower open and a dip below the lesser Fibonacci line at 13.115, but prices failed to exceed Friday's low, and I have reverted and they've reverted back up, also failing to exceed Friday's high. And looking right now like an indecisive doji cross today. US E-mini S&P futures. An inverted hammer pattern on Friday. This follows on from the previous session's bearish engulfing pattern. Now, inverted hammer patterns are interesting. You see, traditionally, two-day inverted hammer patterns are seen as a bullish pattern, bullish reversal pattern. But the data indicates that something like 6 or 7 times out of 10, they act as bearish continuation patterns. So it'll be interesting to see if the market will follow the tradition or the data. It was nevertheless the second consecutive close below the middle time, currently at 37.14 of the previously oft-mentioned January to March bearish Andrews pitchfork. This is only the second time that we've had consecutive closes under this middle time. Now, top side, we have assisting in the capping of the market, the March 2021 low at 37.20. Meanwhile, below, supporting the market, we have the February 2021 low at 36.56. Now, I've spoken at length of the danger period during the crossover of 2 times of the previously mentioned January to March Andrews pitchfork, bearish Andrews pitchfork, and also the bearish shift pitchfork for the same move. I'd highlighted the previous crossover of times from these 2 pitchforks, one on the 18th of May and the other on the 7th of June, as periods where one could expect one or more of the following: volatility, a change in trend, or a reinforcement of a trend. These important time periods I had highlighted with red circles on my daily charts. It is these 2 crossovers that have been the cause of the current market gyrations. For your information, the next crossover, indeed the last crossover of these 2 patterns, should they not be usurped by some other action or actions in the meantime, would be on the 12th of August. There's one other pattern I'd like to draw your attention to, and that is the labeled late March to late April today, possible bearish halfway hesitation. I've detailed 2 separate patterns, as there is an argument as to whether the pattern should start from, well, where it should start from. And that's assuming the pattern works in the first place. Therefore, target X is for the pattern originating in April and is in the 35.55 area. Meanwhile, target X1 is for the pattern originating in March and is in the 34.20 area. Both are currently within the bearish Andrews pitchfork, which seems to be running the show right now. And so far today, well, a higher open and a reactionary move back up to the middle time, approaching it but not breaching it as yet. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.